Hey everyone, welcome to the Real Financial Freedom Podcast. I have my good friend Long here. Today we're going to talk about a few things, but there's something that's been really the headlines in today's real estate world. There's a lot of talks about the real estate market going to crash, the stock market going to crash, the whole world is going to crash. So we're going to talk about what we think or what we predict is going to happen and how we feel about it, whether it does crash or not. So thanks for joining me, Long. Welcome to our podcast. What's going on today?
Not much. Happy to be here, Sam. Always look good to have conversation with you.
Yeah, for sure.
Yeah. There's just a big question. Everyone's saying the real estate markets will crash in Toronto or even just the world. I guess. I think with a lot of things they're worried about stock market, everything they're just worried about the crash or they're hoping for a crash so they can buy in. But I think me and you have the same mindset that especially the Toronto real estate is not going to crash. Right? I think it still has so much room to grow. Of course, the prices are higher now, but it's not going to go any lower. It may stagnate a bit, but I think your opinion on this matters because you've been doing real estate for a long time. You've bought real estate. You sell real estate. I mean, you are the expertise in this, right?
Yeah, well, you know what? Like, there's always every year there's somebody on the TV or on YouTube. They're predicting a crash, and it's funny because they're only right when it actually does it. So they're wrong maybe 10 years straight, and then they're finally right on the 11th year. So there are always people predicting a crash, and historically we always have crashes every 10 to 20 years. So it will happen, but real estate is always going up and down in an upwards way. So as long as you're not playing the short game, you're not flipping properties, then you don't have anything to worry about because regardless, in the long run, in real estate, you're always going to win, especially in Toronto. Like you said, Toronto is one of the strongest real estate markets. Even when there is crashes, global crisis, like I remember the '08 crash, Toronto had the least effect compared to some of the cities in the States. Some of my friends in the States, like they got decimated. But Toronto, because it's such a strong market, there's so much foreign investors, there's so much money coming in, so many immigrants, so much international students. There's always a shortage of supply, and that's what it creates so much demand because we're really short of supply. So even when there's a crash, it might just correct it. The prices a little might go down a little. Usually the really high price point homes are the ones that get affected. So if you're investing in the lower price homes, the entry level asset classes like 600,000 to a million, it really won't get affected. Very little, but again, like if you're playing the long game, even if you bought something today for 600,000, in a year or two it's gone up to like 750, and then we have a crash, it might go down to 700, and then I'll just continue going back up 800, 900, and so on. So in the long run, you're always going to make money. And one thing I learned, you can never time the market. It's not about timing the market, it's about how much time you spend in the market, right? That's how you build generational wealth.
Yeah, that's right. And like Gosh was talking to another real estate friend too. He's like, because we're planning to buy something as well next year, to start more of our portfolio as well. And his one main thing is don't blink, right? Like whenever you face a situation like when you buy a property and like let's say if there is a crash or whatever the prices go a little bit lower, he's like, just don't blink, stay on course, ride it through, and then you gain it through. Because it's the ones that blink that really do lose the most. Like they panic and they sell,
right?
And like let's say they sell a loss, and then that's what really happens. Like, but real estate, it is a long game, right? Like if you're playing for short term, yeah, but that's for anything too. If you play anything, stocks, Bitcoin, anything, you play short term, the chance of you losing is a lot higher, right? But if you play the long game, as my name is, I'm here for a long time, not a good time. So, but yeah, like I think real estate is one of the best investments to play for a long game, right? Because like you have so much opportunity with it, and you can use your debt. You can leverage your capital. I mean your equity and everything, right? Yeah, even myself, sure. I'm trying to refinance right now. Can you explain maybe one little more process with refinancing? What's the great aspects of refinancing?
Yeah, so like the best tax advantage we have in this country is being able to refinance our properties that we build equity over the time. And the best part about it is it's tax-free. Whereas if you sold it, like unless it's your primary residence, if you sell your investment properties, you always have to pay capital gain. But when you're refinancing it, it's tax-free, so you're able to save the capital gains taxes. and you're also able to keep the original property. So instead of selling one, paying capital gain, and then buying another one or two, you could simply hold that one, refinance it, and multiply and compound your investment portfolio. Sometimes you can refinance and buy two properties. Sometimes you can buy three, depending on how much money you're able to pull out. But even if you could just buy one, that's a great strategy, because the money that you would be paying CRA for capital gains, you could simply just put it back in another investment. So these are just very basic tax benefits that a lot of people don't know about, and the ones that do, they're just flying on autopilot and just keep growing, compounding, and multiplying their generational wealth. And that's what we like to teach our clients a lot, especially the first-time investors.
So yeah, like truthfully, I forgot who says like it's sometimes not much how much money you make, it's how much taxes you can avoid, right? Like, and how do you, and then one of the great aspects of real estate is, yeah, you, like for for stocks, you have to sell your stocks to get something, and you lose it, right? Like then you that's how you're able to pull the money. But for real estate, yeah, you don't lose the house. You don't have to lose the house. You don't have to sell it. You just have to refinance it.
Yeah.
You still keep it and let it grow, while you buy something else, right? Like, it's versatile, right?
Yeah, exactly. And with the thing with stocks, like if you want to buy $500,000 worth of stocks, you need to invest $500,000. Do you know what I mean? Whereas
Yeah.
in real estate, like if you want to buy a $500,000 investment property, all you need is 20 to 25% of the amount. So you need basically $100,000. You're able to leverage the other people's money, which is ultimately the bank. And you borrow 80% of the amount. So you're able to actually buy 5 houses for the same amount that you would invest 500,000. So if you're going to invest $500,000 in stocks, you can buy $2.5 million worth of houses with that. So think about it. That's 5 times more the leverage, whereas you don't get it in stock. And then on top of that, like you said, the stocks, you can't really go and refinance stocks. You have to sell it. And sometimes you're worried, am I selling it at the right time? What if it goes up? What if it's too down right now? So you're always like stuck in that dilemma. Whereas real estate, like if you're not selling it and you're refinancing it, even if it goes up and down, it doesn't really matter, because you still own that property. If it goes up, you benefit. If it goes down, you just wait for it to go back up again. So it's really it's an art. It's an art and science, and it's almost like a secret recipe, a formula to building generational wealth that they don't teach you in school. They don't even teach you in real estate offices or brokerages. Like this is something you learn from the people that actually have done it, and it's unfortunate that a lot of people don't know about it. You know what I mean?
Yeah, and that's what truthfully I love about our team too. Like, I've learned a lot from you, and also like even translating to clients. We're like, we don't believe in just selling you the house and kind of leave you alone. It's like, hey, we're here with you the long run. If we help you buy something here, we'll help you buy something else. We'll help you to grow with you. Like, we're down to walk with you through everything to help you gain. The more money you make, the more happy we are. We all work together. We all grow together, right?
Absolutely.
How do you think? So with inflation, inflation is basically not coming. It's basically here already. Everyone's seeing it. How do you think inflation? How do you use your real estate to because they say real estate is the best way to fight against inflation. How would you use your real estate to protect yourself from inflation?
So like the great example is if you had okay, the best example I can give for something that happened to me, because like Long said, we're not just a real estate team that tell people invest in real estate and we don't do it ourselves. We've been investing in real estate for many years. Like I've been investing in real estate even before I got into real estate, because of my father. He's always pushing us to get into it. He even helped us on the first one, and I could really see all the benefits at a young age. But we're investors. I've made a lot of mistakes. I've had painful experiences, maybe I didn't lose a lot of money, but it was just stressful to go through it. And I learned a lot. And for example, one example that I can give in regards to what you talked about inflation is a pre-construction project that I invested in years ago, which happened to be a builder who just started. It was their first project in Richmond Hill. It was a condo townhouse I bought for $570,000 like 4 or 5 years ago, and we put down $60,000. Everything looked good on paper. and what happened was the builder couldn't finish the project, so they had to cancel the project. They were going bankrupt. They sold the project to a new builder, and the new builder did not honor the contracts. So this doesn't really happen too often. It does happen one out of every like couple of thousand projects, but it could happen to anybody. It happened to us, and that was a great learning curve. But the point back to inflation is that same unit, when they canceled the project and the new builder took over, they started selling the same unit at 750 4 years later. So what I could have bought 4 years ago for $570,000 is now 750. If you have $1,000 saved in your account today, or 5 years ago, that $1,000 could get you a lot more meat. It can get you a lot more gas. It can get you a lot more housing. It can get you a lot more products, cell phone, Wi-Fi. I like uh, the utility bills, all that stuff. You get more of it. But today, like everything is more expensive. You know, gas, bacon, chicken,
Yeah.
uh, produce. You know what I mean? So
Yeah.
even like when you're ordering food from outside, I noticed just in the last like 6 months, like the same food. Like I have certain foods in the memory of my thing, like because I have the same like three kids. So like sometimes I have the same food that I used to spend like maybe $55. Now it's like $65. And some of them are forced to drive up the price because they're also spending more money on everything. You know
Yeah.
what I mean? So at the end of the day, what I learned is saving money in your bank account is not a way to build generational wealth. You
Yeah.
have to invest it. Don't spend it. Invest it.
Yeah, that's true. And then, like, with that, like, inflation, if you have a property that's saying it goes up in price already after 4 years and you don't worry about inflation, you can use your refinance to gain some money to survive during these tough periods of like of inflation and all that forth, right? And with increased prices, your house increases too, right? So that's one of the ways we protect ourselves from inflation, right?
Yeah, real estate is the best asset to hedge against inflation and recession and all that stuff. Like it's the best asset. The wealthiest people in the world have become wealthy as a result of real estate. You know, it doesn't matter how much money you earn, whether you're an artist, rapper, basketball player, professional soccer player, real estate agent selling real estate. You're not gonna get wealthy selling real estate. You're gonna get wealthy buying real estate. So it's really important that people understand, no matter what you do, how much money you earn, uh, just create a strategy. Find a good investor-focused real estate team that understands the risk of investing. Because a lot of real estate agents out there are trying to sell investment properties to clients, investors, but they don't really do it themselves. So they don't understand the risk. They're just trying to make a commission, unfortunately.
Exactly.
So you need to work with a team that really understands the risk. Like they've been through it. They've been through painful experiences. So they're not going to just push you into something without feeling the risk that person is taking. Because there is a risk. At the end of the day, no matter what you do, there's a risk. Fortunately, in Toronto, the risk is very little. And in a lot of cases, if you're playing the long game, it's not a matter of if you're going to make money. It's a matter of how much money you're going to make. So you're either going to make $300,000 on a great purchase, great opportunity, great deal, or you'll do okay. You'll make 100,000. So at the end of the day, like it's very hard to lose money in Toronto real estate market unless you play the riskier games like really high end luxury condos or houses where sometimes, like I said, in recessions and stuff, those get affected a little more. But if you stay in the lower price points, you're good to go.
Yeah, and the luxury ones you don't like. Those are more for like for yourself too. Like it's not really like as investors you're not gonna look for like a $3 million penthouse or like that. It's like just you're looking for more like the more meat on the bones, right? And
Right.
and it's funny like even like COVID, like think about it. If COVID with all the shutdowns, everything, and then the prices still went up. Like if COVID doesn't, if COVID, like pandemic, hasn't forced the prices down, then I think the only thing will be like World War III. And by the time World War III comes, truthfully, I think you're not really worried about your real estate losing money at that point. Like
Worry about your life.
you're worried about your life, right? So like I mean, if a pandemic can't force Toronto real estate down, then it just takes an act of God basically for like.
It just shows how strong our market is. Like there's been a lot of real estate markets across North America that I talk to my friends that prices are going up, but nothing is like Toronto. Like I was talking to somebody, like if you bought a condo in Yorkville in the beginning of this year, or somewhere downtown, you make anywhere between 100 to $150,000 in 1 year. If you bought a house in Oakville 3 months ago, you already made $200,000.
That's crazy.
So, and that's just in the last few months. But throughout the whole pandemic, it's been going crazy. And a lot of things, we were selling a lot of properties, a lot of pre-construction virtually on Zoom. Like people were not even leaving their house and they were buying pre-construction. So it just tells you we have a very stable, reliable, lucrative real estate market, and our economy is driven by it. So
Yeah, it's crazy, and it like cause it expands outwards too, which is crazy. Like even Kitchener, how much was the Kitchener? Like
yeah,
that's
like
like all the way right, like in
yeah,
water.
like I have a buddy who basically is top agent, top real estate broker team, Tony Johal in Kitchener, and like he used to tell us like, and I remember even doing my own research, prices were like 2, 3, 400,000. Like 400,000 was the luxury market. Right now, and he used to always like complain to us that, oh, you guys are lucky, your average price is like 7, 800,000. And now like his, I think like this like average price about 7, 800,000. So a lot of it's gone crazy. Barrie has gone crazy. A lot of the suburbs, it's just kind of expanding. But you gotta understand, we have millions of immigrants that have not even come in yet. So all these things are happening without even us having all those immigrants come in. We haven't even had international students come in the way they normally do. Like normally, I remember in 2019, before the pandemic, we had 600,000 international students that came to Canada. In 2020, during the pandemic, we only had, I think, 6,000. Sorry, 60,000. So 10% of those people came. So think about it. We have about 600,000 to a million international students. We have over a million immigrants that are just stuck. They want to come in, and probably like millions in the next 5 to 10 years that are just dying to come here. And they're not. And Canada is not just pulling in any immigrant from anywhere. They're pulling in all the geniuses, intelligent, people that have money, people that are smart. You know, they're basically sucking all the brains of the world.
The brain drain.
Yeah, all the brains of the world into Canada, and all those people are going to be buying houses, selling, investing in properties. So it's just going to continue going up, and we have a shortage of supply.
Yeah, it's been like I think the biggest aspects for us, like the whole trying to Evergrande thing. People, oh, well, but it's not gonna happen in Toronto. I'm like, well, no, because we like the whole Evergrande search is mostly because it's a supply and demand issue. Their supply exceeded their demand most likely, but for us we're the exact opposite. We're like, I mean, we have a shortage of supply. Our demand is so high, like there's no worry about it. Right? Like,
So here I have this thing here that I was trying to pull up on my phone. We need 100,000 new homes a year, and the supply is about 30,000 new homes a year. So we have a shortage of 70,000 new homes a year. Think about that. Ontario needs to add 1 million new homes, approximately 100,000 homes per year to keep up with the population growth. At the current rate of construction, Ontario is already short of 70,000 homes a year. That's a year. And that just keeps growing. That problem keeps getting bigger and bigger because it's not like that number 30,000 is becoming 40,000 next year, 50,000. No, that number is either getting smaller or it's the same.
mm-hmm.
But the demand is becoming more and more because more immigrants, more international students. It's just going to continue growing it, right?
Yeah, like wherever there's a shortage of supply and there's high demand, I think that's the way you want to go, right? Like you want to be the ones to be part of that growing aspect, right?
I want to kind of go to the next topic because it kind of goes back to that. So a lot of people ask about cash flow versus equity.
I was going to ask you about that.
Yeah.
That's perfect.
So like in Toronto, because the prices are so high, and the rents are pretty high too, but compared to the prices, it's hard to get cash flow like you used to 20, 30 years ago. So it's kind of a different play, In Toronto, it's the equity play. You're banking on mega appreciations. You're banking on buying something for 600,000 today and selling it or refinancing in 3-4 years when it's ready. For example, in pre-construction, and the value is already 800,000, 900,000. So in Toronto, it's hard to get cash flow, but there are other markets in Canada or the U.S. where you could have cash flow, but you're not gonna have these appreciations you have here. So it's like, you can't have both. You can't have it both. I
Yeah.
guess at this time, unfortunately, it would be nice. It would be nice to make $300,000 in 4 years,
Yeah.
and also cash flow like 3-4 thousand. I mean, a couple of even a couple of $100 a month. As long as you're not paying out of your pocket, it would be nice. But you know what? Think about it. If you're making $100,000 a year, even $50,000 a year equity, but you have to pay $200 a month out of your pocket. Like, are you willing to, like, if you had a business that costs you $300 a month, but at the end of the year you made $50,000, would you be okay with that?
Yeah, obviously.
For sure, right? So it's and some people ask, so should I do cash flow in other cities, or should I do the? I'd say like do both. You know what I mean? Diversify. Like, yeah, there's no, should I do this or that? Just, you know what I mean? Try to diversify your investment. If you can get a few properties like cash flow in Calgary, in Nova Scotia, Edmonton, Saskatchewan, Florida. There's a lot of different cities in the North America that you can cash flow and also have decent appreciation, right?
Yeah, like honestly, like that's the thing. What I think a lot of people don't forget. Like they forget the bigger picture. I think of real estate, like especially for the equity and cash flow play, like it's, you can ask any person who start their own business. When you start your own business, the first year, are you making any money? No. You're most likely paying money out, right? Like,
Right.
but that's the future. You're looking further into futures, like where my company will make me more money, right? The same thing as when you buy your real estate in Toronto. It's like, hey, yes, I may be paying $200 a month extra, or 300, like maybe out of my own pocket, but in the long run, I'm gonna make more money, right? Then that's how you start your portfolio, and from that you grow, right? But yes, maybe like you may suffer for a year just to pay that out. Maybe my friend, actually my good friend from high school, what he did, like he was eating spaghetti like almost every day, like whatever scrounging around, he'll eat like the scraps for like a year and give his wife and kids like the good food, whatever. But himself, he's like, I ate whatever was possible that's cheapest and whatever to save that money to put into the property. Guess what? A year later, he made money on his real estate. Like, I mean, it's you gotta stop looking at the short game, as we talked earlier. It's a long term game, and once you look long term, it just the picture just seems bigger, right?
Right. And look, playing the short game in real estate, you can still make a lot of money too, right?
Yeah.
It's just not as easy as people think it is. Like, if you're watching these TV shows like on HGTV, and these guys are flipping houses left and right and making a ton of money, like these guys have a whole art, like a team behind them. You might not see that entire team in the TV show, but they have a lot of experience. They have research teams, like they sit down and study, like they really study the markets, and they spend a lot of time learning the trade. Like, so it's not, you can't just come in and start flipping houses and expect to make a lot of money. You know what I mean? If you want to do that, it's definitely a lucrative business, but you gotta learn. You gotta, just like stocks, like just because, like, if I don't really invest in stocks, because I really don't understand it, and I haven't put time to study it. But it doesn't mean you can't make money. It's just not my thing. But if I wanted to do it, I would spend hours and hours just educating myself. So if you want to get into flipping, like, you could do it. Just, you got to really study the market. You got to learn, and you can still fall, but at least, like, you know what I mean. You'll kind of have a better idea. And
Yeah, you have a better cushion too, right? And like also like with with flipping houses too, like it's, I think why some investors are really go away from flipping houses that are really invest is because, like, flipping houses, do you have the time for it? Do you have the the time is one of the biggest aspects. Like, you're not just, it's not something you can put your money in and let it grow. It's, you have to be active in it. Like, you have to look at the materials. You have to look.
Yeah.
There's so much research for that. Then you look at the supplies and all, like, to renovate and all that stuff. Like, it's not, it's almost a full-time job. It's not like something you can come in like, oh, okay, I'm buying it, I'm gonna leave it, I'm gonna let the equity grow, right? It's
yeah, you gotta learn. You gotta really educate yourself. But with the long term, like with real estate investing long term, honestly, like, you don't even need to know what you're doing, and you can still make money.
Yeah.
The only difference is if you're investing like in the long game, like I always tell our clients, you can, in Toronto for sure, I can confidently say that you can close your eyes, just open the map, and just, like, just go like this and boom, put your finger on anywhere in the map, and you'll make money. If you're playing the long game, not about flipping.
Yeah.
But if you really want to win big and have those mega appreciations, then you got to follow the money. You know what I mean?
Yeah.
Find out where the government is investing in vital infrastructures that cannot be built overnight. follow where the government already have invested in those types of infrastructures like subways, um, go transit, go buses,
Highways.
universities, highways, malls, any type of like secondary, post-secondary education that drives up the rental prices. Like if you invest in those areas, then instead of the average 4 or 5% a year, you'll make 10, 15% a year. That's when you kind of have those mega appreciations. But again, you really don't have to know what you're doing, like in the long term. But it helps if you know, or at least work with the real estate team, investor focused realtors, that can help you and guide you and kind of point you to the right direction. So instead of making good returns on your investment, you make great mega returns on your investment.
I think that's why we also Westline was one of our favorite projects. I think it's
Yeah,
because this just had the infrastructure there already.
everything
Plus,
was there.
like yes, it had subway, a GO train, a highway, a mall,
Like
university.
if the the subway alone is like enough. Like
Yeah,
if the subway alone is enough, imagine having also a GO Transit. If subway and GO Transit is enough, imagine having York University. Imagine having 209. So like Westline was one of the best projects I think in terms of our investments because it has a lot of those infrastructures, and I think it still has a lot of room to grow. But
yeah,
there's a lot of projects like that, a lot of different locations. That's why I like Center Court because they're almost like an investor focused builder too.
yeah.
Like they build in thinking about the investor ahead of time.
Yeah, exactly. They had a foresight to like why Downsview area because they're building 1,000 acre community. That's like a new downtown in that area, which is like what do you not want to buy into like a new downtown area before everything starts rising? Like like then
Yeah, for
you're
sure.
in it first. Whereas like when it's like Young and Finch. I mean, well, Young and Finch used to be like this barren little land, and now then after these two brothers came and bought like the land there or bought some houses there, then it just rose up and like that
Yeah.
they were ahead of the game, right?
Well, like it's there's a lot of projects that they call it master plan community, so-called master plan. Like anywhere there's more than one condo, they're calling it master plan community. But I think Westline and the Downsview area is a true master plan community. It is the largest master plan community in all of the GTA, 1,000 acres. It's unheard of. And then for you to live near a subway, GO train, uh, mall, highway, all that stuff, and to have a 291-acre park in your backyard, it's unheard. Like you can't even have a small park in your backyard in downtown. Imagine having a 291, and that's a federal park. It cannot be touched. They're not gonna build on it,
Yeah.
right?
And I'm pretty sure they'll build some more malls there because it's 1,000 acres, more business. Like it's just a. That's why I think you, and another a few of our agents actually bought properties there, right?
Yeah,
So
we invested in Westline, a few other projects. Like these are builders we trust, right? Like they have a premium, their name has a premium. So I think the reputation of the builder is always really important. You might pay a little more for a project, but honestly, a lot of people like look for the cheapest. That's not necessarily you're not gonna get the highest return on your investment when you're looking for the cheapest. Like that's not always the best option, right? Sometimes it doesn't have to be the most expensive, but like you shouldn't really factor that as your decision making process.
yeah, like unless like I think for some people it's just they look for cheapest but expect the most. But I think the aspect for some of these people, especially first investors, the first aspect is not don't look for. I mean, look, obviously you want to look at the area to see how much money you can gain from it. But like, I mean, if you're only have a certain amount of money saved and so you have a certain amount of money, I think the first aspect is just to jump in, like into the just buy real estate basically, and then let it gain something else for the future, right? Because like unless you jump in, the longer you wait, and what we noticed even like with Notting Hill we sold before, like people jumped on that like crazy, but the ones who didn't jump called you back. It's like, oh man, I should have
Yeah,
jumped in.
we were selling that in like 2020 for $900 per square feet. Now it's about 1,250, $1,300 plus per square feet. So whoever bought a 500 square feet condo there, they already made 150K, like in a matter of a year and a half.
Right? Like
So
that's
like where
insane.
else are you gonna make $150,000 for a $500,000 purchase in a year and a half? You know what I mean? For doing nothing. Like they didn't even leave their house because that was in the time where everything was locked down. People were sitting on their computers. I was literally wearing my dress shirt and my shorts, talking to people with our clients, and people were investing. And you know what? The ones that took action, they reaped the rewards. But also, there's another thing. A lot of people ask, like, where should I invest in pre-construction? Like, where would you like to ask me? Where would you invest if? And my answer is, well, like if I could afford the downtown Toronto area, I would like, especially for condos, I would always start with downtown Toronto. Like I've seen the biggest appreciations in downtown Toronto, especially some pockets of it. There might be more meat left on the bone for investors, but downtown Toronto is like, for me, I think is the best place to invest. Even with the pandemic and all that stuff, like look, the rental market went down a little. The resale prices and pre-cons maybe got affected for the first year, but right now you can see it going crazy again. Multiple offers on rentals, multiple offers on resale condos. Launches, pre-construction launches in downtown are selling out really quickly. Uh, there's a lot of demand for it. There's always going to be a lot of demand in downtown Toronto, and I think it's probably my favorite place to invest. But if my budget didn't allow me, if I'm a first time investor and I didn't have the budget to get into a downtown Toronto, then just kind of drive out of downtown, starting with like the Etobicoke, North York, Scarborough, those areas, and try to look for projects that are near subway stations, near GO Transit, like we discussed. Obviously, reputable builders, good deposit structures, and try to get in there. And then if you still can't afford it, then just keep driving. The trick
Yeah.
is just keep driving until you can afford it, and but always like try to drive and look for projects that are near those infrastructures, like go train. All like the first thing is subway and go train, go transit. Those are the main things.
Yeah, yeah, because like especially for because if you're renting it out too, like it's just easier for like for whoever wants to rent it. Like, why would you not want like a subway or? So it's just
Yeah.
transportation. Like you have easy way in, easy way out makes everyone's lives easier, right?
And the appreciations are huge, like both in the value of their investment, but also the rental growth. Like the average rent per year also goes up much faster or much more than if you're investing in like a standalone condo in an area middle of nowhere with no subway, no go transit. Like you'll still make money on that, but you're not gonna have the same appreciation growth and the rental growth in than if you did invest near a subway.
Yeah, and like I think one of the aspects we try to teach our clients, especially first-time investors, is like especially when you're buying like don't look for one of the things like there was, oh, I want the high floor or I want the best view. It's like it's I mean, as a first-time investor, I think that's not the focus, because you still make money on it, right?
Right.
Like, and the point is not to just go in and just like, oh, I'm gonna make the most out of it. Like I think as a first-time investor, you especially in the right project, the floor does not matter as much. The view does not matter as much as investors, right?
Yeah, like it's. I think the most important thing is trying to getting in the first round pricing, first access, because then you get the best price. And then when you wanna look for premium units, sometimes it depends on how much more you're paying for it, right? Like if you're paying an arm and a leg for it, you might not get those returns when you're selling it. But sometimes it might be worth it. If you're only paying like 20,000, 30,000 for a premium unit, then it might be worth it,
Yeah.
right? But then again, don't get too caught up on that. Don't say, okay, if I can't get a high floor on this project, I'll just wait for the next one, because the next one, whether you're getting you're gonna end up getting the lower floor, the cheapest unit for the price of a premium unit in the last building. So like at the end of the day, you're gonna lose. Like waiting and stuff doesn't really help.
It's true. Like even I remember I was young. My mom, but a young infantry bought a condo. At that time, she discussed with friends like we should buy some more, and they kind of backed out. And then now everyone's like kicking themselves. It's like we should have waited. We should have just bought right then. Right? Like it's like when you see a good, like it's like when you see something good, don't be caught up to fine details. It's about just getting in, and especially first round pricing, because even though I have some people who come to pre-construction, you don't make much money. I'm like, well, it depends on which project you're going into, and it also depends on you'll make money on it no matter what, but also like if you get first access, then that's when you get the most meat on the bone. Like especially like for example, non-Hill.
Right.
The building's not even built yet. They already made $150,000.
Right.
And it's like what 2 years away, 3 years away from being even built. So by the time it's even built, like how much money are you gonna make already, right?
I never really seen anybody that kind of like didn't buy real estate and they said, I'm just gonna wait. I've never heard anybody come back and say, well, I'm so glad I waited.
Yeah.
Like, you know what I mean? I hear a lot of people say, I wish I just bought it last year, or I wish I bought it 2 years ago, or I wish I did this, or wish I did. there's a lot of regrets, but not too many people say, I wish I waited. Maybe there's a handful of people that were gonna buy before the '08 crash, and then they didn't, and then they were like, "Oh, I'm glad I like." That's the only case, but well, honestly, if you're gonna try to time that, like, it's like sometimes you may have to wait 10, 12 years for that, and you never know when it's gonna happen. And at the end of the day, with these smaller price points that we're like really focusing on for investors, it doesn't really matter. Even if that happens, it won't get affected that much.
I feel like, especially Toronto, that bubble they're waiting to burst. You better have a better chances buying the lottery and wait. Like, you better win, because like the Toronto, like with inflation of cost, everything costing more, like the price just won't go down. Like, why would builders build something? You know, with inflation and everything, well, this doesn't make sense for them to charge less after. Like, they'll wait, if anything, like for things to go through, and then like they'll build again, and like you said, it goes up an upwards trend.
and
Like,
down
yeah,
and
it goes up and
down.
up on an upwards trend. Like, it'll go down a little bit, but it'll still go back up, right? That's why I think just don't blink is one of the best ways of the real estate.
Yeah, I think it's just play the long game. Do your research. Work with a investor-focused real estate team. Make sure that you understand the risks. Make sure you understand the deposit structure, the closing cost. Um, make sure you have the incentives that are designed to kind of incentivize more investors. Like, for example, deposits, extended deposit structures,
Cap levies and
yeah,
stuff like
cap
that.
levies, assignment rights, lease during occupancies. Those things are important, and also, yeah, just don't hesitate too much. Just take action, because honestly, like, um, market's moving up fast. Even if it does something happens, it's gonna continue going up. So just play the long game, and I think you'll have a very good results in Toronto. Like, Toronto has proven over and over again it's one of the strongest real estate markets in North America. So we're very blessed and fortunate to be here and get to enjoy this amazing opportunity. As immigrants, we're able to enjoy this opportunity, but also we're able to help uh, other people, like young, old, newcomer, people that are born here, like anybody who wants to build generational wealth. We're lucky to be a part of that journey. For me, that's a passion. I love building generational wealth for me and my family, and now I love helping other people, especially like people that don't know how to do it and don't understand it. I love helping those people more, because I feel like I kind of like put someone on a path to basically learn something that they don't teach us in school.
That's true. Well, that's great.
Yeah, so I think with that said, I think we're gonna wrap this up. Thank you so much for listening to our podcast today, and hope you guys enjoyed it.